Hi everyone, Meera Oak here, partner with Alumni Ventures. I might wait a few moments just for people to trickle in. All right, now that I think we have a few more folks, excited to delve into this topic of hidden returns and the multi-billion-dollar opportunity in female-led startups. And why this opportunity sort of delivers both strong financial returns and meaningful impact. Here at Alumni Ventures, I think we believe backing female founders isn't just about equity, it's about smart investing. But before we dive in, I just wanted to kick things off with some disclosures. We're speaking today about Alumni Ventures and our views of the associated investing landscape. This presentation is for informational purposes only and is not an offer to buy or sell securities, and which are only made pursuant to the formal offering documents for the fund. And with that, we'll kick it off. So, my journey to venture capital started many years ago, and it started at Yale University, where I worked on the finance and endowment team, managing about $1 billion in assets, and then moved over into broad-based tech implementations. So I helped onboard an ERP system, shifting from Oracle to Workday, as well as a whole slew of different business intelligence tooling, essentially giving, this 300-year-old institution, for all of its worth, a little bit of a facelift from the tech stack perspective. And having seen sort of what tech adoption looked like within a large legacy enterprise, I really wanted to work with early stage venture funds and incubators to sort of gain a closer perspective to new technology and the founding teams that were leading the charge. So through this experience, I saw firsthand how capital allocation shapes industries and opportunities. And it really reinforced my belief that investing in talent, oftentimes overlooked talent, can really create outsized returns. And with that, my road was led to Alumni Ventures, and that belief really sort of has taken hold here. And at AV, we're dedicated to making venture capital accessible to individual investors. Since our founding in 2014, AV has raised over $1.4 billion from more than 10,000 investors, backing over 1,500 portfolio companies. So this scale, has made us one of the most active VC firms globally and a top 20 performer, which I'll get into a little later. But our team of nearly sort of 100 professionals operates from key hubs across the US, and it really ensures broad access to the venture ecosystem. You'll find me in San Francisco, but it's really helpful and productive to collaborate with my colleagues who have a pulse on, other thriving tech ecosystems. So maybe to get into those trophies that I was alluding to, I'm really pleased to share that this unique and powerful sourcing engine has consistently won us access to both competitive and strong performing deals alongside leading venture firms. So as a result, we've cultivated the largest, most engaged community of investors and entrepreneurs. And that is really supported by a CEO services department that drives success for our portfolio companies. There are too many awards on this page to cover them all, but one that I'll highlight is that we were recognized as a founder-friendly investor by Inc. Last year. And I think this award really demonstrates that our firm has this established operational excellence and a really strong content brand and a world-class team, of course, all of which create significant moats when it comes to venture investing. And I think that's really important in this market and this climate. So to double click a little bit on our investment strategy, we'll flip sides to focusing on sort of how AV co-invests and sort of what the model looks like there. So as I mentioned previously, a key part of our investment strategy is co-investing alongside top-tier venture firms, such as Sequoia, Andreessen, Kleiner Perkins, and many more. And building off that last slide, I think this approach has really earned our recognition as a top 20 VC per CB Insights, and it's ensured that we sort of consistently have high caliber deal access, while leveraging the expertise of the best in the industry, like the firms you see here. So now delving into the topic of the hour, within Alumni Ventures, the impact of investing in women has been clear for a while. And in many ways, it's been inspired by the names that you see on this page. So Fei-Fei Li is a longtime professor at Stanford, widely considered, the godmother of AI. She transformed her startup, World Labs, into a unicorn in just 4 months, which is incredibly impressive, and had the backing of some of the, those all-star names you saw earlier, like NEA and Andreessen Horowitz. Another example here is Meera Murati, who's an exceptional technologist and rose to prominence as OpenAI's former CTO. And she's expected to launch her own AI venture and raise, hundreds of millions of dollars for that, that company, and has already sort of been recruiting incredible top tier talent from, the Googles, the OpenAIs, the Anthropics of the world. But I think what these two examples highlight is that investing in female founders and female founders in general, these aren't anomalies. They're proof of what's possible when we fund top female talent. And I'll get into that a little bit. And I think what sort of Fei-Fei and Meera's sort of stories highlight is that their stories aren't necessarily the reality we see every day. So despite seeing sort of exemplary stories and track records, the underlying data shows that female founders, outperform their male counterparts, but most female founders struggle to access capital. And so this isn't just an equity issue, it's sort of a missed financial opportunity. And this is what I wanted to focus on here. So the reality here is that there are two major dynamics at play. The first is that we are leaving significant financial potential on the table. So if you look at reputable studies and analysis from platforms like BCG and First Round Capital, women-led ventures deliver twice the returns per dollar invested compared to male-led companies. And they identify high growth, underserved markets and just have a resilience that drives success. And as a result, women-owned businesses have the potential to generate trillions of additional revenue with the right financial and human capital. But there's a second dynamic at play, and it's that we are well positioned to take hold of this financial potential because we found ourselves in the middle of a historic 84 trillion great wealth transfer that will place unprecedented financial power in the hands of women. And it's estimated that I think by 2030, women will control the majority of baby boomer wealth and create a wave of capital that is ready to fuel the next generation of female businesses. So simply put, the timing is perfect and it's the time to act is now. So moving to the next slide, I think if you harness that potential that I was referring to earlier effectively, then this is the potential impact. Women-led innovations are reshaping AI, energy, healthcare, and finance, and so many more. And we're seeing household names like Anthropic, Canva, Bluesky, and Facebook as really prime examples, many of whom now command billion-dollar market caps. And so if we ask the question sort of how did this happen? How did we get here? The research shows that women-led ventures face distinct challenges. They face challenges accessing capital. They face challenges securing mentorship. They face challenges identifying support throughout the life cycle of a company. Yet, even in our own portfolio, we've seen these hurdles foster adaptability, resource efficiency, and strong collaborative networks. And I think these are all key traits of high-performing founders, regardless of gender. And one story I really want to highlight here is Bluesky. And I think it really sort of highlights a closer look at both grit and resilience. So one of our investments is Bluesky, which for those who are not familiar is a decentralized social platform using its AT protocol to offer customizable algorithms, community-specific moderation and federated networks. And the company was actually conceived by Jack Dorsey in 2019, but it became an independent company in 2021, led by CEO Jay Graber. And so in 2024, so just last year, Alumni Ventures joined Bluesky's journey as part of its Series A fundraise, which was a $15 million round. And what we learned through that diligence process and investment process is that under Jay's leadership, Bluesky became independent from Twitter, and it really emphasized decentralization and ethical monetization. She introduced Ozone, so it ensured sort of effective moderation and really reinforced user safety. And amidst the sea of sort of competition in this space, Jay, navigated challenges. She secured the funding that we were pleased to participate in. She drove innovation, and it really ensured Bluesky carved out a distinct space in social media's evolving landscape. And so we were just so thrilled to be a part of that journey and to support Jay in leading the platform forward. And now taking a closer look at the funding gap, despite these incredible stories that I highlighted earlier, and specifically Jay's story, and really the strong capital efficiency and returns of female founders, only 3% of VC funding goes to women. And it's really a number that has barely changed in the past 30 years. And I think this isn't, due to performance, it's due to bias. And, additionally, only 15% of check writers in venture capital are women, which is only further perpetuating the funding gap here. And there's even broader effects of this. So the impact is significant. When female-led startups are underfunded, they remain in what I call sort of a constant scramble mode. It's harder to scale. It's harder to hire top talent and sort of market your product effectively. And really the result is sort of lost economic potential. You saw those staggering sort of, the revenue and the money that's left on the table, earlier in the presentation. And if we were able to effectively close this gap, it could increase global GDP by 3 to 6%. And it really sort of unlocks trillions in economic gains. But the question here is, sort of why? Why does this gap exist? So in speaking with our founders and other investors in the ecosystem, the barriers are real. There are entrenched and exclusive networks that limit access to capital and support. There's unconscious bias that really stacks the deck and sort of creates even taller hurdles to overcome. And there's limited investor diversity, which really limits the number of potential partners on the other side of the table. But for those who recognize these inefficiencies, they have the opportunity to profit while also driving change. And so that brings us back to sort of the venture ecosystem, which is, here's the reality. 95% of VC partners are men, and 90% of funding goes to male founders. But the research shows that VC firms with 10% more female investing partners see 1.5% higher fund returns and 9.7% more profitable exits. So investing in women isn't just the right thing to do, it's simply smart business. So where do we go from here? And that's a question we often get, sort of how do you get involved? What sort of action can we take? And so to start, it starts with education. Educate your community, highlight and support female-led startups in your network. The second category is investment. And that means investing yourself and investing your capital. So if you're inspired by Jay's story, Fei-Fei's story, Meera's story, and so many others, you can start a company yourself, or you can support the ones that have already been started. And in this ecosystem, money matters, and committing capital to high potential female founders is a smart business decision. And finally, collaborate. So in this ecosystem, it seems sort of broad and expansive, but it's quite tight knit. And so if you can pool your resources, both from an industry expertise perspective as well as a capital perspective, alongside inclusive investors, you can really drive change and returns. And one more thing is that if you'd like to access a portfolio of venture-backed companies, Alumni Ventures serves a range of accredited investors with different motivations and needs, from the venture curious to the trophy hunter. And I think the intention here is that we want to be your venture partner wherever you are in your journey, because we have something for you. Awesome. And so for those who are interested in Alumni Ventures, and more specifically our Women's Fund, I encourage you to reach out at the link provided. With our team, we handle the heavy lifting, and you really reap the benefits. And this presentation will also be recorded, so feel free to share it with folks in your community who might be interested. We're really looking forward to seizing this opportunity together, and thank you for joining. But throughout the presentation, I've been thrilled to see that we are getting some questions from the audience. So I just wanted to take a moment to address some of them. And the first one that's coming through is around lessons learned. So I think one of the questions is what lessons can be learned from successful female-led companies like Canva, Bumble, and Spanx, and how can it be applied to earlier stage investments? I think this is a great question, and something actually like a retrospective that we like to do often, because I think there are sort of character traits, there are certain sort of aspects of a founder profile that we look for in our early stage companies. And I think one thing that stands out about these examples are sort of having a very deep understanding of market needs. So I think, when companies sort of conduct extensive market validation before scaling, they are often sort of ensuring that their product is not only solving a pain point, but solving a hair on fire pain point. And it often comes from founders who have firsthand experience in their market and show deep customer empathy. And so I think when we look at, Canva, which simplified design for non-designers, Bumble empowered women in dating, and Spanx really solved a real pain point in women's fashion. I think these are all companies that identified and validated a real market problem and a market pull problem, right? Like it was something that the customers were actively seeking out, and they built a product around it that really resonated. And I think that stems back to the founders who just built a really deep understanding of what their customer was looking for. So I think that was a really great sort of attribute to see. And I think perhaps another aspect that I've noticed from these companies, and then more specifically in the portfolio companies that we've worked with, is just looking for companies that demonstrate high capital efficiency, right? So rather than sort of raising sort of excessive funding and sort of exuberant spending, seeing founders who have disciplined financial management really drives long-term sustainability. And I think, I think the running anecdote around Spanx is that they launched with just $5,000 of founder savings with, no outside capital initially. And so I think just seeing that drive and sort of dedication to being a capital efficient business is really sort of true across all businesses, but especially true in this market where it's no longer sort of a growth at all costs environment. We are very hyper focused on building sustainable businesses. So maybe those are two aspects I'll add. We're getting another question around how can early stage female founders best position themselves to attract venture capital, especially given the challenges of accessing traditional funding networks? Yeah, this is it's a question that I often get from female founders. I think something that that has resonated with me is when I see a strong data-backed business case. And I think we saw, just in this presentation, when we looked at this, the funding gap here and the sort of market potential of sort of investing in female founders, we went to the data, right? We went to research and analysis from these notable platforms like BCG and First Round Capital to really see what research had been done on this particular pain point, and again, the opportunity at hand. And that's what sort of drove our deep dive into this space. And I think in a similar vein, when I see a founder that prioritizes traction, metrics, and sort of a hyper focus on key performance indicators like revenue growth, customer acquisition, retention rates, I think it really highlights not just strong market validation, but it sort of also emphasizes your understanding of your business model and your competitive advantage in this space. So what makes your solution unique and difficult to replicate? And that sort of stems back to metrics. So I think overall, that's something I would encourage founders to think about when they're crafting their pitch, because I think you can't dispute data at the end of the day. And then I'm getting a question around sort of AV and their role in changing this narrative, which I think is really important, and in part why we launched the Women's Fund last year. The intention was we have had this platform at Alumni Ventures and have always had a focus and an interest in funding female led startups, but launching the Women's Fund was our sort of stamp in the ground to essentially say, look, we see these tailwinds at play. We see that there are female founded companies that are sort of underserved from the venture community. And we see that there are female investors who are excited to support these companies, and not just female investors, but investors broadly, right? There's a lot of appetite from the investment community to support female founded companies. And so we launched the Women's Fund to essentially give people a platform to invest in both early stage and growth stage businesses that were led and founded by women. And that's, it's still sort of matching the Alumni Ventures rubric in that we are still creating a diversified portfolio by stage, sector, and geography. The focus here is just with female founded businesses. So we're really excited to sort of start changing this narrative, hopefully in the positive direction, and increase that 3% metric that we've seen for too many years at this point. And then maybe I'll end with a bit more of a tactical question, which is, I love this, but most of my assets are in retirement accounts. Can I invest in AV funds with retirement funds? And yes, the answer is yes, you can. And if you are interested in understanding sort of the step-by-step process of how to do that, I encourage you to connect with our investor relations team by booking a call with this QR code, and they will walk you through that entire process. But that's a very common pathway for our investors to invest in our funds. But I think with that, we may be at time. So I really appreciate you all joining for this webinar. If you have any other questions, please don't hesitate to reach out. Our investment team is always excited to chat with folks, as well as our investor relations team. So we are excited if you're interested in investing, but also if you have interesting companies that are interested in securing VC funding, we'd love to meet with them. But with that, I will let you all depart, and thank you so much for joining.